Want to go straight to that breaking news coming from the FDA. Meg Terrell's got the latest. Meg.
Hey, Melissa, the FDA just voting an outside committee of advisors in support of the second COVID-19 vaccine from Moderna. This vote was 20 in favor, none against, one abstention from this vote of outside advisors to the FDA. So the FDA is expected to act quickly to issue this emergency use authorization, perhaps as soon as tomorrow or Saturday, and that would trigger 6 million doses of Moderna's vaccine going out next week, joining Pfizer and BioNTech's vaccine on the market. Another 2 million of those expected to go out next week. Melissa, this is a big moment. The more vaccines that get on the market, the more supply we have, the more healthcare workers and nursing home residents, the people on the front lines of this pandemic, will be able to get protected from it. And Mel, a really huge moment for Moderna, too. You're not seeing it reflected in the share price so much yet because it's had such a big run this year, but this is the first product for Moderna to get on the market and a brand new technology from both of these companies, Moderna and Pfizer BioNTech, messenger RNA, which many hope will provide a new technology for vaccines for the future, Mel. So the second positive vote from this FDA committee of outside advisors for Moderna's COVID-19 vaccine.
Clearly proof of concept for Moderna, whose entire platform relies on this mRNA technology. A big moment for the U.S., as Meg Terrell had mentioned. Guy Adami, we've been through this before, but yet this is still a momentous occasion.
No, it's fantastic and good for Moderna. I mean, I know we've gone back and forth in terms of the stock, but I think we've been pretty steadfast in terms of the company and what they've achieved. And congratulations to all the people behind it. And, you know, it's interesting. The messenger RNA is this generation's, remember, CAR T therapies that we were talking about 5 and 6 years ago with some of the oncology names. So it's great news. In terms of the stock, you know, I thought the run was over $40 ago. I still think it's a little long in the tooth. You've seen what's happened to Pfizer, which peaked out around $43. You know, now that's trading $38. So I think it's, for the stock, in my opinion, sell the news event. However, we have said, and I'll continue to say, and Tim, I think, spoke of this last night, IBB has been a monster. I think it made an all-time high last night, had a big day today. I think you stay with the biotech ETF. That's been working. I think that will continue to work.
Yeah, Tim?
Yeah, I do too. Again, it's a multi-year breakout in the IBB. You have a number of companies that have very strong balance sheets, and a lot of companies that I think have positioned their pipelines for a fair amount of upside. Have to agree on Moderna. We had Jefferies on earlier in the week. I think after a great call and being out in front, they put a hold on the stock at a 150 target. And again, their pipeline and their approach to the prophylactic vaccines and the oncology drugs are very, very bullish for this company, I think, for the medium term. But in the short term, it's had a tremendous run. But yes, very, very exciting times for our country. And I know we're going to talk to Steve Leisman about some of the jobless claims data that is a little bit scary. But you know, we have to be looking at this at you know, where we're going to be on the other side. And I think there's going to be such pent-up demand that that's really what I would choose to look at.
Again, the full FDA must still vote on this panel's recommendation for the approval of emergency use authorization for this particular vaccine. But Karen, in terms of what we need right here, right now, this is great in the longer term. But for right now, when we see the claims numbers deteriorating, we saw November retail sales deteriorating on top of a revision down in October sales. It may not come soon enough.
Well, it might not come soon enough for those people, for sure, right? If you're unemployed and you can't make your rent, even, I don't know if you have forbearance or not, or you know, literally don't know where your next meal is coming from, it's not soon enough. For the market, though, it is soon enough. I agree with Tim. I think we're just going to be looking through to whenever that other side is. I mean, you know, when we had the shutdown in March and April, we hoped there would be a vaccine. We didn't expect it would be this quick and this effective. Obviously, the market's in a very different place, but I just think we're going to look through to back to some sort of normalcy. So I agree with Tim. I'm optimistic about the market.
So, Dan, this must reinforce the reopening trade. And does that then reinforce the notion that the stay-at-home trade should be over?
Well, here's the thing, Mel. I mean, the reopening trade is here. The S&P 500 is at all-time highs. The Nasdaq's at all-time highs, you know, up tremendously year over year, on a year where earnings growth in the S&P 500 collapsed. It's going to be down 15%. So when you think about that, I mean, what is the reopening trade? Back when Karen was talking about March or April, when we had very little visibility of what the impact was going to be to the economy, what the long-term scars on the economy were going to be, what the health implications were going to be. At that time, we were thinking that our best bet would be herd immunity at some point in 2021. So yes, we do have the vaccines, but they came at a cost. They came at obviously a human cost, and they came at an economic cost. And so the fact that the stock market is at these all-time highs, it's discounting a whole heck of a lot of good news. So when you talk about those claims numbers that we saw 2 weeks in a row, and you think about what the unemployment number is going to look like, we know that that is a mirage. We know that the unemployment number is much higher than that 6.7%, and it's going to take much longer to get back those 10 million jobs. You talk about the work from home trade. That work from home trade extinguished jobs going forward. It accelerated certain technological transformations that were going to happen in the workplace. So to me, I think our economy is going to be saddled with a lot of problems even once we get this vaccine out to our entire population and we've reached herd immunity. I don't think we're out of the woods yet from an economic standpoint. And the market, if it wants to close at the tippy-top highs of 2020, I think there's going to be hell to pay in early 2021, because we just can't get above 4,000 to all these really bullish targets from here. I mean, we just can't. There has to be a sustained pullback at some point.
Tim, the reopening, I think that's a fair point in terms of the S&P 500 being at a record right now, closing record, and that is the reopening trade. But some traders out there will look at the sort of the higher beta names out there, like the cruise lines, like a Royal Caribbean. That's not at a 52-week high. That's not anywhere near still. So does this news sort of underscore the notion that these sorts of trades have life in them?
Look, Dan is right to be concerned about fundamentals matching up with markets, but and yes, if you look at market sentiment indicators, look at the AAII confidence indicator, bulls over 60. This is a bullish, extreme. But look at the dollar plumbing new lows almost by the second. Look at the Fed yesterday reinforcing their support for the markets. Look at the dynamics that I think we have in terms of breadth of the market. How about the banks? They're trading still below their pre-COVID levels. How about a lot of the industrials? And I think you have a part of the market that still has a ways to go, in addition to some of those growth trends that I don't think die and were accelerated by COVID. So you have to take this all with some sense of call it a rational thought process, which I think we've all largely had. Fundamentals don't have to match up to the market here. And as long as we have those support systems, including some fiscal stimulus around the corner, I think early 2021 can actually be okay.
Shepard Smith here. Thanks for watching CNBC on YouTube.